Let's start off with Reliance Industries. Now, what we are given to understand is that strong financial performance is being seen in the first quarter. A 76% year-on-year surge in the consolidated net profit of 26,994 odd crore rupees. That's driven by the consumer businesses. One-time gain, of course, is there of 8,900 odd crore rupees from the stake sale of Asian Paints. But despite that, also the earnings on the bottom line seem good. When we talk about revenues, it's come in at 2.44 lakh crore rupees. That's also an improvement from earlier. Brokerage houses are still giving, about 1,767 kind of a target price. That's the highest that we have. Earlier, Nuvama had about an 1,800 kind of a target price. That was the highest one that was given. It slightly trimmed that one to 1,767. But most of the brokerages still have a buy and they are actually looking at higher targets from the current levels. How would you look at Reliance Industries and the earnings that have come in? What stood out for you in the earnings?
I think the margin was a beat for me. The EBITDA performed really well. We had the highest ever EBITDA performance.
Yes.
And that is telling you that the entire business is getting its, growth back. So for the big elephant in the room, getting your mojo back is very, very strong. And I think Reliance would do well over the next, couple of quarters because we are getting the growth back. So I think Reliance really stands out for me, and I won't be surprised if your highest target is met.
Highest target is met, you won't be surprised. Let me just quickly read out for all our viewers what some of the brokerage houses are saying. So Macquarie has an outperform with a target price of 1,500. They believe, of course, optically the earnings beat estimates driven by one-off investment gains. At the segment level, they believe Jio was strong. Retail was lackluster, but O2C is gradually recovering is what they said. And they also did point out that management presentation definitely suggests optionality in new energy, Jio and retail going forward from here. Let's also look at Morgan Stanley, which has a 1,617 target and an overweight rating on Reliance. Here they say that Reliance earnings did not provide growth confidence that they had hoped for. Now, what they say is that guidance was optimistic, plan to double earnings by 2029 is also there. But despite misses both in retail revenue growth and fuel refining as well. They did say new energy, telecom, balance sheets were the bright spots in the earnings. What has HSBC said? They believe the buy rating continues with a target price of 1630 there. They also believe the earnings were definitely supported by a one-time share of sales, but operationally a bit light on lower O2C and retail. Whereas they did say that the UBR-led air fiber is picking up pace. Retail is in the last leg of turning around and the company is gearing up to launch the new energy business at large. When we talk about some of these new businesses, do you think they will have the continued strength to move forward from here? The pain point remains retail. How soon do you expect that to turn around, Vinit?
So see, that is a nationwide phenomena where retail has been lacking, and for the size of Reliance as it is, it's going to be, dependent on how retail overly performs. But I am hoping that, things will get better as we go ahead. All the measures that the government is taking on the liquidity front will start impacting. Rainfall has been good. So hopeful that, this next quarter onwards, retail will pick up.
Okay. And, on a year-to-date basis, the stock is already up 20%. Do you think these earnings have enough to provide a fillip to the stock to move up further from here?
As I said earlier, that the EBITDA improvement is telling you that the operating profit and growth are coming back. Even if you adjust for the one-off, I think the growth is there in the net earnings, and that is going to drive the performance forward.
If you like the video, do like, comment, share and subscribe.